Joining me now to talk more about this is Vance Howard, CEO and Portfolio Manager at Howard Capital Management. Good morning, Vance. It's great to have you in studio.
How are you?
Good, thank you. So talk to me about what's your take on this week's market activity so far, especially as investors are anticipating NVIDIA's earnings after the close today.
Well, if you look at NVIDIA and you look at the earnings, historically what will happen is it's a good day for investors. You see in the market in the green today, we were talking about that a minute ago. I think NVIDIA's earnings will be pretty strong to good, and I think it'll push growth stocks back up into the forefront. But if you look at what's gone on the past week or so with this sell-off that we've had, you know, on the Qs, we were almost at 540 on the Qs, which would have been a breakout, which would have been a very positive sign, but we pulled back from that. The trend's still up, but this negative sentiment that we've had over the past week or so has affected stocks to some degree, and we've had a good pullback, especially in tech and the NASDAQ. But net, we're still bullish. The trend, the HC on Byline, our proprietary indicator, is still positive. So net, I'd be a buyer on pullbacks. And I don't think investors should see this as a negative. I think they should see this as an opportunity.
Well, as you mentioned, there has been, it's been choppy right now in the tech sector, but there's additional pressure on tech stocks like NVIDIA and on Tesla. So what's your take on the Tesla?
I think Tesla's a buy. I'd be buying Tesla here. I'd be buying Salesforce. CRM looks good to us. All these pullback in the tech sector, I think, is a gift to investors, because I think what we're going to see is a little bit more of a pullback that we've got. I think we're seeing some sentiment pressure because I think investors are a little bit skittish. They've had a lot thrown at them in the past 4 to 6 weeks, which is understandable. Net, the trend's still up. I'd be a buyer on these stocks that have pulled back.
Now, ahead of NVIDIA's earnings today, what should investors be on the lookout for? What should they be eyeing as we get ready to see those results?
Well, I think what you should look for, if NVIDIA's earnings are good, which I suspect they will be, I think you're going to see this tech sector start to stabilize. But we were at we were at overbought area with the Russell 1000 and the Qs and the tech sector. The S&P's not oversold yet, but you look at the NASDAQ and you look at some other areas of the market, it has gone from being an overbought to oversold now, so I think there's a lot of opportunity here. This pullback, like I said, I think it's just a point of, investors are a little bit skittish because of the amount of information that's been thrown at them and the uncertainty that's been thrown at them in a really short period of time. But net, the trend of the market is still strong. Earnings are good. You've got $7 trillion in money market accounts right now sitting on the sidelines. So if we get any upward push, I think you'll see some of that come off and be put into equities.
I do want to turn to Lowe's, Home Depot. Their earnings came in stronger than expected, than analysts predicted. And as we await NVIDIA, even though we're on the tail end of earnings, what would you say are the biggest trends right now that we're seeing in the sectors overall?
I think when you look at the sector too, if we have deregulation, I think it's going to take a lot of pressure off a lot of different companies, whether it's Lowe's or whether it's the tech sector. It's going to give them a little bit more runway to grow. It's going to give them a little bit more runway to increase their earnings and their value of their stock price. So net, like I said, I'd be a positive buyer here, even with this, and don't ever short a dull market. And this market, other than the past 3 days, has been pretty dull the past 6 to 8 to 12 weeks. So be real careful being on the short side of this, because it has a tendency to really rally back up with one piece of good news.
And we have a lot of economic data coming out this week. In addition to earnings, we have home sales, jobless claims, and the PCE index that's set to come out on Friday. What are the Fed's expectations, and how will this PCE report signal the rate drops that are coming
I think this is a critical point, because you've seen organically, the 10-year Treasury yields going down. I think you're going to see it go down to about 410, 420, and it was up around 460, so organically it's moving down. I think that Fed Powell, I think he needs to be very, very careful here, because if it's organically moving down, be careful with what you say. Yeah. And because you don't want to put too much pressure on anything right now, because things are working out in a reasonably positive fashion, in my opinion anyway. And pullbacks like this, what we're seeing over the past 3 or 4 days, these are common. It's just movement.
How do you expect inflation to have an impact on the Fed's decision with rate cuts?
I think that it won't have an impact on them cutting rates. What it's going to have an impact on is how many rate cuts they're going to have this year, if they have one. And I think that's what the investors are looking at, is that sentiment. Whatever Powell's going to say, I think it's going to affect things to a pretty decent degree.
Do you have some sort of idea of when you think the trajectory of the rate cuts will take place for the rest of the year?
Not until the latter part of the year. I think if you had third or fourth quarter, maybe. But I think, again, if organically the rates are moving down, which they are, I think you hold firm.
And stocks and bonds are also moving together lately.
Yeah.
What does this trend signal? Because it's not often you see this sort of format.
Yeah. Well, I think as interest rates move lower, I think that you're going to see stocks start to pull back up. And again, the pullback that we're seeing, Trinity, is no more than a technical pullback. You had it where it hit resistance. You were almost at a breakout point at 540 on the Qs, didn't make it. We're setting up and we're building up steam again. And I think that when we clear that 540 on the Qs, we set ourselves up for a real clear breakout on all the indexes, the S&P and the NASDAQ.
And given we are in a choppy market, how should investors balance individual equity, ETFs, and mutual funds?
I would be trading ETFs right now. You've got a broader pool than just individual stocks. Unless you're going to be more of a short-term or intermediate-term trader and buying an individual stock, I would trade the ETF as a whole. I think you got just as much bang for the buck, but you spread out your risk.
And how are you balancing dividend yields given the higher rates?
Well, with dividend yields, dividends have been playing well this year. Dividend stocks, value stocks have played very, very well this year, and we own quite a bit of them. So that's been a nice play. It's been more of a stabilizer in the portfolio because we still like tech. You can't hardly not like tech. I mean, let's face it.
I mean, you sort of have to like tech, right? In our economy that we're in right now, especially with the changing climate. With the new administration, speaking of tech, how do you think the overall tech sector is going to be impacted?
I think it's going to be impacted positively. I think every industry is going to be impacted positively because if you take off deregulation, maybe you can lower taxes on some of these corporations and individual tax rates. You've got more money to to be thrown at individuals' equities. And again, if the interest rates are dropping organically, so that means some of this money in money market is going to come back into the market also, which is another positive sign. But the 10, the 20-year treasuries have gotten so far oversold. Any pullback in rates, you should see a nice pop in the bond price. So that's a positive for bond holders.
What else should be top of mind for investors as we finish 2025?
One thing that, again, go back to tech, and I keep saying tech, and I always make this joke. When you look at tech, Procter & Gamble is not going to make the most interesting bar of soap this year. But technology is going to create some things that make an incredible amount of interest for investors to participate in and what things that will affect our day-to-day life. Like I said, like CRM, Salesforce is one of our top picks for 2025, and one reason is we can see an immediate impact on AI on how that can affect that stock. And then I like recurring revenue. And Salesforce has got recurring revenue. You don't have to go out and resell the product every month. It's already sold. You got a check coming in for their subscription-based subscribers and their consumers. So stuff like that really interests us quite a bit.
Do you have any favorite stocks?
Salesforce is our favorite stock for 2025. I think it's a wonderful play right here. Well run, well managed, earnings are good, AI is going to kick in. And again, I like subscription-based services where you're not having to go out and resell the product again and again.
A lot to look out for. Again, thank you so much, Vance, for joining us in studio. Vance Howard, CEO and Portfolio Manager at Howard Capital Management. Thank you for joining us in studio.
Thank you.